My screen.
Good to go.
All right. Hey guys. Welcome. It's been interesting past few weeks. I've actually been traveling quite a bit, and we had the event in Amsterdam where we got to hang out with a bunch of you guys, had a great time. And then, just basically been ever since I got back, been reevaluating a lot of investments, kind of planning and mapping out the next 6 months or so, or at least through the kind of the end of the year. And I've just been having meetings and kind of getting back into the flow. And so as you guys know, kind of mid-July when I was traveling, started to get into this position. And, my kind of the rule that I kind of imposed on myself was, okay, don't trade when you're on quote unquote vacation. But then I realized I'm like, being a crypto investor and entrepreneur, like I'm never really on vacation. So as long as the internet is good enough to trade on, if there's a good opportunity, I'm probably going to take it. The only difference is I don't like trading like really big size if I'm not focused that well. So thankfully, this gave a little bit of time and I did get a decent size. I think I'm somewhere around 50% of what a full size position would be for me, which has gotten increasingly larger over the years. But I just wanted to kind of start and talk about the big picture, look at what Bitcoin's done, talk about some of the kind of the macro possibilities and probabilities, and then drill down to the intraday and intra-week action and talk about my trading plan and kind of what my expectations are. So with that said, let's kind of jump out to a weekly chart. And I'm going to go, doesn't really matter what exchange we're looking at as long as it's a really liquid one. So if we just start with a clean chart, we happen to be looking at Bitfinex. You can see that in the grand scheme of things, we went through a pretty quick market cycle where, we had the slow bleed, and then really the accumulation period was only from, end of November to early April. So, about 5 months or so, which was quicker than the prior cycles. And then right now we seem to be in phase two, where we have kind of the quote unquote early trend, right? Now, what does that really mean, early trend? Well, we don't know. We don't know how long that could last. We could have 6 months or 2 years or more of healthy trending price action, or this could be it. This could be the top, and then we go back into another kind of smaller cycle, right? But my philosophy is that when we are showing signs of strength and when we're showing signs of a healthy trending market, I like to stick with that until we either have a massive parabolic move, kind of similar to what we saw in late 2017, or the trend fails, right? And it reverses, and then we go, oh, okay, I guess that's it. The trend is over, right? Otherwise, the danger with trying to pick tops when the market is trending is that you can grossly underestimate how far trends can go, right? We've seen this several times with different cryptos. We thought $100 or $200 was massive for Ethereum, and it ended up going to 1,300 or over close to 1,400, right? So when it comes to looking at this price action, I've just been running runs and retracements and extensions and kind of mapping the market structure. And let me jump back over here. And so you can see, again, this was the first sign of a reversal, right? Through here, we had potential reversal, didn't do much, and then it developed into a really strong line of resistance. And then as soon as that broke, that was kind of a sign that the market conditions were shifting. We had another consolidation, which was about, if I'm not mistaken, 40 days. I was also looking at the price ranges here. So this market structure here was, call it 35 to 40 days. And then you can see from this consolidation, this market structure zone was about the same. So, about a little over a month on both of these, right? Somewhere in between 35 and 40 days each time, right? So just kind of measuring the consolidation zones, right? And this is what we like to see for a phase two, right? So a phase two, which is, call it the early or healthy trend, right? Is where you get a run and then you get consolidation and then you get a run and then you get consolidation and then you get a run and then you get consolidation, right? That's basically what a healthy trending market does. What an unhealthy trending market does is it starts to speed up relative to the prior action, right? And we saw this in 2000, going from 2016 into 17. And I won't do this analysis because we've done it 1,500 times, but from the breakout of 2015, we basically had much longer time periods, right? It was like a breakout, 100%. Bitcoin doubled and went from 250 to 500. And then we had 6 months of consolidation. And then we had another 50 or 60% run, a little bit less than 6 months. And then we had another consolidation and then it sped up, right? And then when it went from 8K to 19 or 20 in 3 weeks, that's when we knew it's like, okay, this corresponds with futures opening, which is extremely bearish. And it's just unsustainable at this point. That's how we knew a top was close, right? So at this point, if we're kind of comparing, this is a little bit different where the accumulation period was shorter and also these breakouts are shorter, right? These two were about the same. And I was looking at this and saying, okay, well, from this breakout here, where are we at? Well, we've already exceeded that. So that to me is kind of interesting. I'm like, what is happening? Are the consolidation times getting longer? Because that's a possibility too. And what does that look like? What if we do a double of that, right? Somewhere into maybe early to late September. So I would say like a double of this market structure as far as the time goes would be sometime in September to get another breakout potentially. But again, the market doesn't respect time horizons precisely. It's just kind of a guess in some way. So if I'm looking at this now, we know we've had one run, two runs, and 3 runs. And each time, let's kind of measure the price structure on the price range. So on this one, this went up about, call it 40%. And then this breakout was about 60%. And then this breakout was also about 50%. So you can see each one on a percentage basis is relatively similar, right? In between 40 to 60%. No, none of these really stick out as being extreme. So that's really just how I see it right now, is like this thing is trending until it's not. And let me go back to a clean chart. If you look at market structure, what's the most important thing with that? Well, it's support and resistance, right? So the first thing I like to do is just kind of draw up, if we were going to do really basic kind of TA here, draw up these price levels and say, okay, where are the most important price levels? And you can see through here, first it was 4K, then it was 5,500 or 6K, then it became 7,500, and then 9K became a very important price level. And if you look back, I'll just kind of pull up my trade alert from the kind of initial entry. Let me see where that was. So back on, was this 7/17? Yeah. So if you look at the trade alert that I sent out on 7/17, this was the chart, and you can go reading the notes. I said I was watching this zone as the potential support, right? Because this was prior resistance turned support. It was also a really nice sweet spot Fibonacci retracement from the full breakout, right? And it was also on the downside, it was 100% extension from this pivot high to that low to that lower high. So there was a whole lot of compelling reasons that the 9K area was support. And then once you know kind of where the important price area is, then you say, okay, well, what is the trade setup and what does the risk to reward look like and what's the entry strategy, right? So my entry strategy initially was a scale in. So let me actually back up. So talking about the trade setup, this initially we were thinking, okay, fast washout for a quick bounce play, right? But as you can see, this didn't really develop into that, right? This is more of just like kind of a dip buy and then the market's holding up. It's not like a fast dip bounce play where, you know, the market goes up and then you get like a really sharp, fast decline of, you know, call it like 30 to 40%, right? If you get like a 30% plus washout over the course of 1 to 3 days, then typically what you get is like an aggressive bounce. But then we usually sell that into the bounce because it's more of like a day trade or like a short-term swing trade. What this is to me is more of a longer term swing trade because the market structure is still intact. So what I did was, let's zoom in on the hourly chart, is I started in down here in the mid 9,000 range, got some fills somewhere in here, and then added a little more on the bounce play here. And then as it came down, I was watching for a double bottom on the daily and started scaling in heavier, trying to get my cost basis down. So that was my trade alert on this chart. So that was on 7:30. So on this green day, after the doji candle was kind of confirming the double bottom there, I started to add in, and that helped bring my my average cost basis down below 10K. So initially it wasn't that great. It started to creep up over 10K. And then on this buy, I think my average is somewhere around that green line. I marked it up. So right around like 9,800. And so mapping out the risk to reward on that, what I did is I ran 2 extensions, and I posted this in the crypto trading chat channel. Say that 5 times fast. It basically ran 2 extensions, one from this pivot low from the initial breakout, and then one from the shorter term breakout, or from the last pivot low right there. Okay, so that's how I ran those extensions. And then you can see there's some confluence. So both extensions lined up here around 15K, and then both fib extensions also had some action around 19K, which also coincides with the all-time high, right? So those are what I used for risk to reward. And after the double bottom, I said, okay, so this went from I'm scaling in and also have some low dip buy orders, kind of where Rocky was saying, you know, in case we do get a deeper washout. But once we had that double bottom confirmed, this went from kind of a fast dip buy to, again, a longer term swing trade. And I know at this point, like if we break this low, that's going to invalidate that dip buy and that double bottom. So my stop is behind that. If it starts to come back, I'm going to do the best I can to minimize or eliminate the risk on that. But as of right now, this is basically what the risk to reward looks like is, you know, an average fill around like 9,800 something, looking for that first profit target up around 15K, and then risk down to, you know, call it 8,500. And so that's risking like 10% to make 50%. So a 5-to-1 reward to risk ratio is pretty good. And then we'll see what happens. You know, that's kind of the big picture. This again is like a multi-week or a multi-month swing trade, which is different. So again, this is Capital Bucket that is dedicated for trading, right? I still haven't really taken any profit from the accumulation. That is really looking for like signs of parabolic move or another bear trend before I take that off. I closed a majority of this breakout trade pretty early. I was scaling out in the 6K all the way through 8K. But again, that was just, a kind of a separate like breakout trade. So as of right now, if we drill down and just look at what the price structure is doing, one thing you'll notice is we have the potential for a third lower high. So I drew some trend lines. Let me I'm going to clean this up a little bit. I drew some trend lines where you can see kind of the top of the wicks and most of the body. So I usually pay attention to where most of the trading activity happened, which is usually where the candlestick body is. And then you can see also diagonal support. So this could actually be like a really long-term like bull flag scenario if it holds up. And really the two possibilities I see here are if this third lower high holds and then we start to fade off, if we break below 9K, then the next major support zone is down around 7,500. And instead of, this is just my plan, instead of just holding through that, I would look to take a graceful exit if this can't hold up. And I would just cut it off and then look to get a lower cost basis. So if we get another setup, even if it's a fast dip buy or if it's a reversal pattern for a longer term play, I would look to get my cost basis down as close to this support as possible, similar like I did here. Now, the other thing is, let's say that it consolidates, bounces around a little bit, and I don't really pay too much attention to the price action like inside of this zone. Like if it starts to, sell off and bounce around, then we can go down kind of intraday to do some analysis and see what's going on. So like, then I'll zoom down here and say, okay, what is the consolidation? And are we getting like, say we get a pullback and then it holds up and we start to retest the 12K area, that could actually give us like another like 1, 2, 3, 4 breakout pattern, right? So that's kind of the bull scenario. And I would actually prefer if we had a few days of like a squeeze or some consolidation into this area to kind of build up momentum to get a break, right? So like, for example, if we look at the daily again, let's say we get, a few days more of consolidation and it doesn't really sell off, but it's not breaking out either. And it's like coiling up, right? Because here we had a lot of distribution. We had a lot of momentum. We had literally 1, 2, 3, 4, 5, 6, 7 green day. We had a full week of straight buying. Then we have this reversal candle at resistance, which is very reasonable to see that after 7 straight days of buying. And then we have another green day and kind of consolidation. So intraday, you can see there's some support here around the mid 11K range, and there's resistance up here around 12K. So we've got about a $500 kind of consolidation zone right now. So if we can kind of flatline or even pull back a little but hold up, and then we squeeze into this zone, if we break 13K, I think we'll have a pretty quick move to the next zone, which would be around 15K. So that's about another 15%. But if we look at the prior structure here, and we know that we had, 40% breakout, 60, 50% breakout, if that follows suit, if the market structure stays the same, then another 50% breakout, in between 40 to 60 is going to put us up there around that 19K mark, right? So on the bull side, I actually, my guess of probabilities is that the bulls are still in control until they're not, right? So I'm leaning, my bias is bullish, right? Which actually shifted right here. So throughout this entire bear market, our bias was to the downside, right? So all through here, the major bias was bearish, and then on the shift is when our bias became bullish, right? And I stick to that bias until we either have, again, either a massive parabolic run that looks unsustainable, or a shift in market structure that confirms that bears are back in control. I like to keep it just that simple. It's really that. So you start with your bias, which is, longer term, multi-week, multi-month, who's in control, bulls or bears, or is it unclear? Then from there, do you have a good trade setup, or where are the tradable areas with good risk to reward? And then where are the profit targets, right? It's really just that simple.
There's a really good quote that someone that I saw on Twitter, I forget who said it, but it was really interesting. I saw it a few days ago. It basically said, in a bull trend, it's much easier to keep, or it's much more profitable to keep buying dips until they fail rather than trying to short until it works.
Yeah. Yeah, absolutely. I mean, and that's why, like, that saying, like, everybody's a genius in a bull market. It's so much easier in a clear trending market. And like, all you have to do is eliminate the noise, right? Because every day there's a reason that Bitcoin's price could fall off a cliff or go parabolic, right? And if you just like use price action as your guide and just know that that's truth and everything else is opinion, then yeah, buy dips, buy breakouts, sell into strength, trade the waves, or not, or accumulate low, pay attention to the waves. You don't have to trade or catch every move, right? Like Rocky's kind of philosophy this year for him at the area he is in his trading career is he's just looking to ride the bigger waves, right?
Yeah, for sure. And this current price structure really reminds me of the parabola that went to $500, where we consolidated into 6-month symmetrical that turned into an ascending triangle.
Yeah.
On the fibs, the current price structure shot up like one fib level, few fib levels higher than it did in 2015. So we're actually a little bit more aggressive now. But you can see, like, the first breakout out of accumulation was a huge parabola, which was unsustainable. Had the biggest correction out of any of the depths in that entire bull trend. It was like 43% or something like that. So that was like pretty, or 42%. So biggest correction. When you look at it, like on the small scale, it looks ridiculous and unsustainable. But then what looks unsustainable, when it consolidates with higher lows squeezing into resistance, suddenly starts to look healthy. Just like the current trend, when we were just shooting straight up to 14K and we just kept ramping up and we didn't have any deeper corrections, the trend did not look sustainable, right? It needed to correct. And I was concerned if it kept going up, we were going to be in a bit of trouble, right? Like, I wanted to see a deeper correction like we had. I think we had about 35%. I think that's perfect. This consolidation to me is perfect. If we
Rocky, that's a really good point. And like, I would say it this way too, like, parabolic moves can turn into sustainable trends if they're followed by consolidation, right? So like, I agree. Like right here, if you look at this like it's the live market, this price bar is absolutely unsustainable. When you have 1, 2, 3, 4, 5, 6, 7, 8 days, 8 green days in a row, just straight buying, and then you see that outlier volume on that kind of blow off candle, that is absolutely in the short run unsustainable, which gives you that kind of initial crash on the next day and then a little bit of a deeper pullback. But as price action develops in the future, the more consolidation you get, the more sustainable that prior parabolic run becomes.
Yeah, absolutely. And we needed it. If we consolidate for, we've already consolidated about 2 months.
Yep.
We tack on another few months, like you were saying, around maybe September or October. Then when we break out, I mean, it's going to have some serious momentum. You know, it's like lock and loaded, trigger ready type of thing.
Yep. And,
And
and that example I just showed, so compare that to this. I remember very, very vividly this red day right here. So
yeah,
this is very similar. We had 1, 2, 3, 4, 5, 6, 7, 8 green days. And then on this day, if you imagine like what the candle looked like during this red wick, so this was a massive green bar. And we noticed that the volume by that time was already exceeding the prior days, right? So we had basically over the course of a week, a 65% or more gain, right? So in 8 days, it went up 65%. I actually took profit here on, I can't remember. I think my entry was like on this break of the 1300. Anyway, I had an entry somewhere in here, and I actually took profit around 2700 because intraday, if you looked at like an hourly chart on this day, like it was going parabolic intraday as well. So like but again, and I think it was the prior day or this day, Dan Blazerian, if any of you guys know that guy, he's the dude on Instagram with like 30 million followers that's always hanging out with all the chicks in bikinis. He put a message out saying, I quote, "I'm buying a shit ton of Bitcoin." So we went, oh crap, this is going to create a bunch of chasing. I don't know if any of you guys remember that, but
yeah, I remember that.
yeah. So I think that was like somewhere right in here, or it might have even been after the parabolic move. I don't know. Oh, he's up to 40 million now. Oh my God. But anyway, look, so you can see like these parabolic moves with consolidation, they become sustainable, right? And that's why like, so this parabolic move led to consolidation, and Rocky, funny enough, you actually bought on that dip.
Yeah.
So again, I think the lesson here is, parabolic moves can turn into sustainable trends if they're followed by consolidation, right? But that's why picking tops is so tough. You never know like which parabolic top is going to be the top, unless it's something like so blatantly obvious, like we went from 8K to 19K in 3 weeks, and we had the first futures contracts launching. Like that was kind of the perfect soup for a top, if you will. Where right now, I don't know if you guys have any other opinions on a fundamental or market sentiment basis, like why this either is or is not a top. I don't think it is a top. I think the probabilities are saying we're going to go higher. But obviously the market can do anything. I just kind of see in the price action here, like really systematic buying. And I know that there are people, there's a lot of gold bugs and a lot of like fund managers, and there's a lot of people that have been kind of bearish on Bitcoin for a long time that are finally starting to come over to the dark side. So yeah, I don't know. We'll see. But that's my plan. Does that make sense, guys? Is that clear? Everybody see kind of the reason for the entry, the profit targets, the trade management. Does the market structure stuff make sense? Any questions, comments? Do you guys see anything different? Cool. Yeah, we can call ourselves the bright side. The dark side is the legacy financial system.
Well, it seems like there's a lot of, on a macro scale, it seems like there's a lot of uncertainty and stuff around all these interest rate cuts and the global markets. I don't know if that's all just fluff or hype, but we're kind of in an economic experiment, right? Like negative interest rates, we started getting negative interest rates in Europe since 2008. And, it's like one of those things, like you buy a bond, let's say you buy a bond for like $1,000, and then when it matures in 5 years, you get back like $950.
Yeah, it's a very weird time. It's a very, very strange time. Um, Zen Zombie asks, can you explain the chart you posted in chat this morning? Yeah, so let me pull that up. So I just posted this. I said a 1, 2, 3, 4 breakout pattern with consolidation here would give us nice gas for another push. So I was looking kind of intraday here, and you can see a trend line of support. And then I was just thinking, okay, like what if we get consolidation up here and we get another like 1, 2, 3, 4 breakout pattern above 12K? That would, whenever I say give us more gas, I mean like the more consolidation we get, the bigger the breakout could be anticipated. So that's just what I was saying there, just kind of looking at this. But really, I mean, I don't care if we pull back to 11K or if it just holds up here at 11.6. Basically, the idea is if we can just get some consolidation and the bulls don't just completely disappear here. Like if we get a sharp V top and then the volume just fades off and there's no buying, that's going to be a sign for me. If we start challenging my entry zone again, I'm going to consider either lightening the position or taking a graceful exit, which basically means like, okay, the market isn't following my plan, so let me cut it off and get out with either a small gain or a break even or a small loss, and then re-enter when I have another trade setup that looks more compelling. That's basically what a graceful exit is.
Yeah, and one thing that we have to realize with the markets too is that this consolidation at the 10K zone, we'll just call it that general zone, is actually really good because we haven't spent a lot of time above 10K. Like Bitcoin has not spent a lot. Anytime it's spent above 10K in like 2018 was hot air, right?
Yeah,
like
that's a good point.
So we never, like, as far as like absorbing supply at a level to actually build strong support, we haven't spent a lot of time in this zone. So like psychologically, and as far as like absorbing supply until buyers take over to push the price up higher, this consolidation at this level, I think, is very important for that reason, until it's kind of like cemented into the market's mind.
I completely agree with that. And I was actually thinking that this morning. I was like, you know, Bitcoin at 10K right now feels a lot more sustainable than Bitcoin at 10K in 2018 or 17, right? Like this again, yeah, like you said, it was hot air. It was going from 8K to 19K in 3 weeks and then just had a massive V top. And it was only up there for what, 2 months maybe?
Yeah. And then it tried it again and got rejected pretty hard.
Yeah.
That was the end of it for that cycle.
So we've been up here for about 45 days so far. And again, I mean, this doesn't look parabolic to me. This looks relatively healthy. So until something changes, I'm just sticking with that thesis.
Absolutely. And, you know, it's a thesis built on 10 years of Bitcoin price discovery. Cyclical. Also, I see it as like a smaller version of gold, you know, because gold's one of those, they do share some similarities in the sense that they're very cyclical with their market cycles. Gold has much slower market cycles because it's a much larger market cap. But if you look at it over the past 100 years or so, it's pretty much been in a bull trend, cyclical, right?
Yeah. Yep. So I don't know. I'm probably just going to hold for 250K. Oh man.
Last cycle it was like When Lambo. This cycle it's When Island.
Yeah. I'm just, you know, Tim Draper was kind of my my spirit guide in 2014. And you know, why not stick with that? I like Tim. He's a super nice guy and he knows his stuff. So
well, he's still kind of our spirit guide because he's invested in Tezos. So
yeah. Well, let's see. We got some questions coming in. Covered the chart. Do you think alts might be hitting a bottom against Bitcoin? Do you think this is going to be an altcoin season? So my opinion on alts hasn't changed since the past few months that we've been talking about it. I don't think we're going to see another alt season like we saw before. This time is going to look dramatically different, just because, you know, that we're not going to have the gold rush of ICOs that we had before. It's a lot more contained, and that's why I'm just being much more selective with the alts that I am interested in, and being also very aware of position sizing. You know, so I mean, I'm only in a handful right now. I mean, I still have some Ethereum, obviously Tezos, some BAT, and like dust on a few others, but I'm really just waiting for high quality. Oh, and also T0, which, you know, again, this is a much longer term play. But, you know, my biggest position by far is Bitcoin. Also, I've been, as I said in my update or my watch list the other day, I've been accumulating physical assets over the past, where are we at? 19, so 5 years. So, you know, I've been accumulating Bitcoin through here. My average cost basis is like 1280, so kind of right in the middle of this range. And you can see we broke out in mid-June above multi-year resistance, and then we had a really nice 1, 2, 3, 4 breakout pattern here a few days ago. So I've got obviously some gold, which, you know, whenever there's currency risk and risk in the equities markets, and whenever we go into times of higher inflation, which we may or may not see, but, you know, people are basically speculating in metals right now and commodities and physical assets over paper assets. And you can even see silver's getting a little bit of a lift. One thing that I thought was interesting that I've kind of been thinking about is the gold to silver ratio. We've been kind of chatting about this in Discord a little bit. So what this shows is basically how many ounces of silver it takes to buy 1 ounce of gold. So like right now, the price of silver is, you know, round up and call it $17 an ounce, where the price of gold is $1,500 an ounce. So if you do 17 times 88, that gives you basically 1,500. So that's what this calculation is it takes 88 ounces of silver to buy 1 ounce of gold. And you can see it's at an all-time high right now. So that to me is interesting. And that means there's either a new paradigm where like this is the new normal and we're going to go even higher, where gold's going to get exponentially more expensive compared to silver, or we're going to get a reversion to the mean. So let's say that gold doesn't really change from here. You know, let's say gold, for argument's sake, stays $1,500. So that means 1,500 divided by, call it 65. So that means that silver could be maybe 20 to $25 an ounce. So that would look like maybe another pop to retest this prior support turned resistance, right? So I think, and again, it's real hard to like speculate on the price of metals for me. It's much different than any other market. But I mean, I could see, you know, one thing I do like about the price of silver is that it's cyclical and it has really nice boom bust patterns. They typically take longer to play out, but like,
It looks like a shit coin.
it does, doesn't it? You know, this had a 70% sell off from the last boom in 2011. So this to me, I feel like has more upside, where gold, you know, what did it fall? 35 or 40%? 45%. So it was still a pretty deep retracement, but you can see, I mean, it's pretty close to the highs. So again, I think gold is either going to break out to all-time highs and silver is going to stay low, and then that gold to silver ratio is going to get even more out of whack. Or if something happens, or like gold pulls back and silver starts to take off, that could maybe get back to the mean or the mid range here. I don't really know. I don't know. I look at metals as kind of different. I don't really care about the price. I just accumulate as a hedge. Obviously, I want to get the best price possible, but I don't really mind if gold, say it like traps here and it pulls back to 700. Great. I'm going to buy a shit ton more and get my cost basis below 1,000. You know, I don't look at this as a typical trade. It's more of an inverse, or uncorrelated asset to like equities, I would say.
Yeah, I've got about 8% of my net worth in metals right now, and I started accumulating gold heavy in 2017. So that's when some of the profits, like I was diversifying profits, and gold was definitely top of the list.
Yep.
Recently on the breakout, the 1400 breakout, I added to my position, but paper trading, just kind of like through my bank type of thing, because I don't want to I'm not actually gonna go sell physical bullion to recapture profit unless it did something absolutely stupid, like go to 10K or something. Then I'd take out all my cost basis,
Yeah.
and keep the rest. But I want to add to that paper trade, just actually as a position trade for a few years, if it does hit another cycle, just to lock in dollar value. And I've noticed that there might be some leading indicators on some other gold currency pairs. For example, the British, and obviously all currencies fluctuate, and the US dollar has been fairly strong. But the gold against the British pound and the Canadian dollar broke out of the all-time highs. And it's retesting resistance at the all-time highs on the euro. So this could be a leading indicator that gold's ready for a new market cycle. I think the macroeconomics are ripe for it, and gold might actually kind of be that canary. The fact that it's starting to move aggressively when it's been so slow. If it all depends how much follow through we got on this momentum, but if we continue with some momentum, then I wouldn't be surprised if we actually did have a deeper shakeout, even in the greater markets. Could actually be smart money doing some hedging preemptively before something else. That's a hypothesis. We'll see. Maybe the rest of the markets do well or whatnot as well. But obviously there's some, like we know that China and Russia have been buying gold, accumulating gold like nuts the past few years. And there's currency wars right now. The US dollar is being challenged as a world reserve currency by places like China and so on and so forth. And the first major superpower to possibly create like a gold-backed current reserve currency or something like that could end up taking market share. Now, obviously, that doesn't have the same elasticity as fiat and fractional reserve as far as economic growth.
Yep.
So there's different opinions on that, right? I could kind of see both sides of the opinion. Some people are really hard money advocates based on, scarce commodities, so on and so forth. But then there's a lot of proponents on elastic money that can expand and contract based on economic growth. I think there's a little bit of truth to both sides, but it does seem like we are in a bit of a debt bubble, and we've just been doing a lot of expansion and not a lot of contraction. So we'll see. But I feel, gold's one of those things that I actually feel really good about owning, just as a long-term hedge and store of value. And it's just about being diversified. I kind of find it silly when I see all this drop gold, go all in on Bitcoin, blah, blah, blah. Like, to me, that's a good marketing campaign, but it kind of seems almost immature. I
agree. I don't think you have to be a maximalist on either one. I think both can win,
Yeah, it's a stupid debate. It's like people suddenly have to make a choice and they can't just buy both and enjoy the benefits of owning both. I don't get it myself.
If I had to choose one, I would absolutely choose Bitcoin.
Yeah.
The utility compared to gold is like, come on. But gold does have some advantages, and I like it. I think it's cool, and I don't know. As long as people have faith that it holds value, I'm going to hold some too.
Yeah, that's far it stood the test of time. 5,000 plus years. So.
Yep. So so I think we're on the same page with that. You know, it's just about like looking at your portfolio and deciding how you want to allocate it. And for me, I mean, I'll tell you, like I have orders of magnitude more Bitcoin than I do gold.
Yeah.
But
Same here.
yeah, but yeah, gold is still a nice thing to have in the portfolio.
Yeah, because Bitcoin's just more aggressive, right? And it's bull trends, so it's an easier play to get faster returns. And if Bitcoin does really well, then I could always add to my gold position. You know?
Yeah. Absolutely. So JR says, my biggest question would be if we have a big stock market crash, say 30 to 60%, what would happen with Bitcoin? My first thought is that it may act like gold did in the early stages of '08, that it retraced as well and then went up. I'm not sure if this would be a big hedge and just start moving up from here, or if it would drop and then start the real bull market. This feels like the start of a stock market crash. What are your thoughts? So JR, I agree. So the question again is like, what do you think Bitcoin would do if there was a stock market crash? We were actually talking about this in Amsterdam. My guess is that, yeah, it would do something similar to how gold reacted in the '08 crisis. Because if you think about it, if there's a stock market crash and there's a lot of fear in the markets, then what do people do? Will they liquidate assets, especially older people that feel like they need that money for retirement, or just people that feel like they need money to live, right? Even if you're younger on the age spectrum. And so what that means is people sell everything. They sell stocks, they sell real estate, they sell their precious metals, they could sell Bitcoin, right? They're going to try to sell anything they can to have capital to survive. You know, when people go into that like survivor mentality, commodities and paper assets are the first thing to go, right? And obviously like luxury items like jewelry and boats and, you know, those kind of those markets are kind of the first ones to get hit during a recession and the first ones to go parabolic in a bull market. So yeah, that would be interesting to see. I haven't really noticed like any kind of reliable correlation to the stock market with Bitcoin's price, which I think is actually a good thing, that it's kind of independent. Or truly like uncorrelated. Now, in the event of a big panic, if Bitcoin panicked along with the stock market, then great, I'm buying more. If it took off because of a stock market crash, great, I'm going to try to buy breakouts and, you know, trade the activity. So either way, I think is going to be good for Bitcoin. I just don't know how the initial kind of shock would play out through the system.
I think what we need to do is set a goal to make enough money in the next cycle to buy Mars as a hedge. So if anything ever happened to this planet, we have a backup planet.
Yeah, we'll just holler at Elon and be like, "Hey, man, Dogecoin to the moon and beyond."
Are you still the CEO of Doge?
Okay, BitVid. Chris, why not take profit at these resistance levels on your swing and then enter on a breakout confirmation? I mean, I like to sell at extensions. I feel like if a trend is in place, a resistance level could actually be a nice level to add on a break. With that said, I mean, I have sold at resistance. It depends on what the setup is. Like, so for me, I feel like, you know, sure, I could take some off the table here. At 12K, I could like scale down and take a little profit off the table, which I don't know. You could make an argument for that and like take some of the cost basis out. But I'm typically a longer term trader where I'm looking for extensions into the future and basing that off of like really good risk to reward. So it's what the plan is. Like there are some people that are really good at trading ranges and trading channels. I'm not that. I'm good at trading dips and breakouts, looking for extensions. So you just have to know your sweet spot.
Absolutely.
Are you guys in any stock swings? Eric, I'm not, but Nikki and Travis are. So you should, if you haven't been in the Monday stock market updates, you should definitely check those out. I know Nikki made some damn good money on a bounce play yesterday. Thoughts on BNB? I feel like I missed the boat on that one. Didn't want to buy high, but might be. Okay, let's take a look. So I haven't actually looked at BNB in a minute. So yeah, I mean, this was one that, you know, it had its early trend. We talked about the market cycle back here, kind of had a V bottom bounce. I mean, just to do some like kind of quick TA on this, I mean, it's holding up above prior resistance. So market structure has made a move higher. I don't really like to chase either. I will say, like, if there's one business model in the crypto space that I like, it's exchanges, because they're cash cows. So, you know, if you were to say, like, I like Binance and I want to get in on some of the economics of their coin. Here's kind of my philosophy, by the way. Anytime I'm looking at a market and price is higher relative to where it was in the near past, I just say, okay, let me take the middle path. Let me look at the best of both worlds. And let's say I bought here, and then worst case scenario, it came back to accumulation prices. So you bought at 30 and it goes to 10 or something like that. What does that look like for the position? So you lose, you know, 2/3 of the position. And then I say, okay, well, what would the bull case look like? Say it's a double, right? So you kind of understand the risk to reward. And then you go, okay, how do I size this in a way that would leave me with no regrets if you did get that crash? So instead of going like all in at 30, maybe you go in 1/3 of the size and you save the dry powder for down here. So if it does crash back to pre-accumulation prices, then you get your cost basis from 30 maybe down to 15, right? That's how I think about it. I don't try to guess if this thing's going to hold up. I just say, how do I size this to where I'm not hurting in either one of those scenarios, right?
Yeah.
That's the nice thing about trading compared to poker, by the way, is like in poker, once the money's in the pot, like you're committed, and that causes people to like chase the pot, right? With trading, you can almost do the opposite thing. You can go, well, I don't have to go all in now. Let me kind of size in a little bit, see what happens, and either scale in more on confirmation that it's holding up, or add if there is a crash and get my cost basis down lower, right? So you can structure in a way where you don't get hurt either way. Does that make sense?
Like when I look at something like BNB, for me, it feels kind of, even though it could go up higher, who knows? Maybe it goes up another 10x, right? It's always possible. I'm with you. I like the model. I like the burn model of a token associated with a profitable exchange. So for me, how I personally mitigate that strategically is, instead of, you know, crying over to spilt milk of having missed out on Binance, or, you know, buying in higher, unless it's just a very specific trade with targets, I'll look for similar tokens, perhaps for other profitable exchanges, which is actually one of the reasons why I did a starter size on Leo. But there's other ones, like it's starting to get popular. KuCoin shares. I know Huobi has a token now. I think personally myself, even though Bitfinex has some issues and stuff, I think they're probably the most profitable after Binance, or maybe Coinbase too, actually.
Yeah.
Be up there. But those three, as far as like volume and BitMEX, those four, as far as volume, profitability, and all that stuff, are, in my opinion, you know, at the top, or at my top anyways. And then Bitfinex just launched 100x leverage futures too, which made BitMEX an insane amount of money, kind of put them as top dogs because of that. And they made tons of money off of the fees and stuff with the high leverage. And so they're jumping into that. So if, you know, it's kind of like a play on whether or not I think they're going to survive their current challenges. They seem very creative in getting out of tight spots, like when they got hacked for that 40 or 70 million. I forget how much it was. I think it was maybe 40 or something. In 2016, they created a token that was like, these are all redeemable. Everyone took a 30% haircut. They gave everyone a token. They said these are all worth redeemable for $1. We will buy all of these back with our profit. And so it was kind of like a bet as to whether or not one thought they would survive or not. And in those days, oftentimes exchanges really didn't survive. And even till this day, a lot of them just die. And when it opened up, they were selling at 30 cents on the dollar. And eventually, I think within a year, they ended up buying back all of their tokens at $1.
Yeah.
So I've seen them kind of pull it off once. And the current troubles they have, apparently they were undercapitalized Tether by about 20%. So it was only 80 cents on the dollar, because apparently, if we are to believe all the reports and news articles and so on and so forth, Crypto Capital had I think it was like close to $1 billion of theirs, or 800 million or something like that. And then Crypto Capital's funds got seized because of alleged money laundering and shady stuff and so on and so forth, right? So it seemed like they kind of got caught in the crossfires. So we'll see. I think it's obviously a risky play, because anytime you have like U.S. government investigating an exchange or whatever, you can definitely get some sour news. You can get lots of like black swans can cook out of that.
Yeah.
Personally, if we got a black swan, that wasn't like a nail in the coffin. That wasn't like a death blow, but just kind of like more like a fluff FUD piece type of thing. If we got like a massive crash on Leo below $1, I would probably go in a bit heavier. But right now it's just kind of like a sample size. Like, hey, if I lose it and they go bust or whatever and it's done, well, it was worth a punt. I'm not going to cry over it. But if it pops a 10 or 20x, it'll certainly be a nice chunk of change worth my while. That's kind of the way I framed it in my mind.
Yeah. Uh-oh. Can you guys see my chart still?
I see Binance.
Okay, cool. Yeah, I was trying to hang on one sec. I'm going to pull up. So I kind of have a thesis about exchange tokens and just investing in exchanges, period. Like I said, I mean, I think that exchanges, at least for the time being, are like one of the best businesses in the crypto space because they're cash cows. I mean, exchanges don't really lose unless they get hacked or shut down, right? They like a majority of traders lose money. A lot of entrepreneurs and startups fail, right? Exchanges are just damn cash cows. It's great. It's a great business model. Now,
Sure.
With that said, like Rocky said, there's definitely, especially in the crypto space, like massive regulatory risk for exchanges. And so my investment thesis is I would prefer to have equity in an exchange over some token that may or may not represent anything. So for example, like this is just a stupid example. If you look at when Coinbase did their Series A in 2013, they raised $6 million at call it a $25 million enterprise value. And then when they did their latest round in 2018, they raised $300 million at an $8 billion valuation. So like basically they went from 19 cents a share to $36 a share. So I'm sad when I see this chart because I'm like, I went in on that round. And then like kind of the other end of the spectrum for anybody that's kind of paid attention to Kraken for the past year or so, they recently did an offering. I can't remember what their valuation was. I just know, what was it, guys? 1, 2, 3 billion, something like that. Whatever it was, when I looked at it, I was like, nope, that's way too high. That's, for me at least, that feels like buying up here, where I want to buy down here.
Yeah.
So like, yeah. So like, Travis actually met with Jesse several years ago. And Jesse tried to hire him. I don't know if you guys know that, but so like at that time, like that early in the round, like where they're a couple years in and you can still get a piece of the pie for not multi-billion-dollar valuations. That's when I want in, right? So, and I would prefer to have equity over tokens.
Is there a secondary market on Coinbase shares? Like let's say I had bought some in 2013, is there any place that I could actually sell those shares?
Yeah, that's what SharesPost is. There's a few other sites like this. It's basically an OTC trading desk. So like you still have to match with a seller and a buyer, and there's the fees are super high. It's like 5% or whatever. I mean, it's your typical like OTC trading desk.
Okay.
But you know, like all the big companies are on here, and I think it's more so like greater fools that are buying on here, and you know like early employees trying to liquidate and stuff like that. So I mean, you can see all the big unicorns are on here. But look at this. I mean, you had Airbnb that raised their seed round back in 2009. They raised $500,000 at a $2 million valuation. Jesus. Now they raised $1 billion in 2017 at a $30 billion valuation. By the way, guys, just a little tangent. I mean, this is why I'm an angel investor. Like, yeah, we were hanging out with one of our entrepreneurs over the weekend on our boat that he took his company from, I think they raised their A at a $10 million valuation or their C. I can't remember. Anyway, they basically went from a $10 million valuation to a $150 million valuation or more just in a couple of years. I mean, that's where you get the real growth is more and more in the private markets. That's why I think it's so important to become an accredited investor. It's like if you're not, you're missing out on that stuff.
So basically, those markets are like the legacy markets version of crypto as far as percentage gains.
Exactly. Yeah. That's why I'm also kind of irritated at the accredited investor rule, because you know the US government nanny state is like, no, we got to protect people from massive gains, which I get. You know, I say that half jokingly, like I get why it's in place, but to me it's ridiculous that somebody who's not a millionaire isn't smart enough to make wise investments. Like, okay, back on track. I don't even want to go down that tangent. All right. So let's go ahead and jump into some other charts, guys. I know we've been going for about an hour now. So
let's look at Tezos.
What's that?
It's this new, it's like a Dogecoin clone.
Oh, nice. Okay, let's take a look. So I have some thoughts on Tezos. You know, it's been interesting watching the fundamental developments over the past several weeks. We got the news. So when was the actual listing? I can't remember. Was it Monday? Was it the 5th?
Yeah, I think it was Monday where it was deposits. Today, it just got listed on their Coinbase app. Monday was deposits for Coinbase Pro, and I think they started trading on Tuesday.
Okay. Yeah. Okay, cool. So basically somewhere around here. So I think the news came out right during or prior to this pop, right?
Yeah.
Or was it earlier?
The news triggered the breakout, kind of.
Okay, cool.
Yeah, right on that pop, yeah.
Okay. So it's interesting looking at this price action to me, because it was like there was a fundamental news event here which did nothing. That kind of failed, and then it fizzled off, and then double bottom bounce. It's actually kind of following Bitcoin's price action in a way. If you look at how it's kind of tracking, you see when that does. Yeah, that was mid-July, early July. Let me see if that's on track. A little bit behind. Actually, a little bit ahead. Interesting. So, anyway, news came out, gave it a pop, moved about 50 to 60%, and now everything's out, right? So we had a very interesting chase. So the high here on Kraken was 170 even. And then on Coinbase, where's Coinbase? There we go. Coinbase, it was 188. So people chased off of the listing. So this is kind of a typical listing in a way where you get either the buying or the selling flood right off of the hit. So there was buying and then the fade. And then now you can see they're basically in line. Yeah, so there was some ARB opportunities and then that quickly went away.
They also added to eToro this week, I think on Monday, another exchange.
Oh, really?
And Huobi opened up a USDT pairing with it.
Cool.
So that opened up another market on that exchange. So basically, we're seeing an increase. We're witnessing the birth of a new market, like from the freaking seeds, right? Turning into sapling and so on and so forth. And now we're seeing, if you look at volume, now we're above 10 million consistently. Volume was fairly low when first started out, type of thing. Right now, Tezos, on a fundamental note, as far as like it being positioned for the next wave of new users and hype and all that stuff, eToro does a lot of YouTube ads. So they're trying to capture like a lot of the noobs and general public. Coinbase tends to be a frontline place for a lot of noobs to come into it as well. So getting added to the Coinbase app today, I think is pretty good news as far as on-ramping. Psychologically, it's at a lower price, so it seems quote unquote cheap psychologically, and indeed it's a lower market cap than some of the other coins. But I was looking at the top 100 coins and kind of tracking their performance this year thus far in 2019. And I basically just kind of measured the low to highs, like basically starting from like December's capitulation up to the peaks of 2019. And pretty much like 80% of the top 100 underperformed Bitcoin. Mm-hmm. And there was about like, I'd say like 10% or whatever of just a smaller amount of coins that actually outperformed Bitcoin and had bigger gains. And Tezos was on that list in mid-range. So Ethereum, Bitcoin from low to high went 340%. ETH went 342, so pretty close to Bitcoin. LTC 554. Obviously, we had the Litecoin halving that created a lot of hype. EOS went up 447%. Link, which is another new project, I kind of missed out on that one. 954%. It kind of ramped up after a Coinbase listing as well. Tezos 490%. Raven 694, BAT 384, and then BNB 810. And then the Bcashes, it also outperformed at one point from low to high percentage-wise. So we're obviously not in an all tides rising altcoin market. The markets are being a little bit choosier as to which ones are going to outperform. So that's kind of being a little bit different. But when we break all-time highs on Bitcoin and go into a new mania phase, we could possibly see an all tides rise again on altcoins. But the ultimate question is, how many are still going to actually kind of be alive, right? Yeah. Because we've also seen the death of many coins, especially small caps, even old unicorns from 2014, like Counterparty is dead. It's like, I think it's got delisted almost everywhere, and it's only got like 5,000 in volume. And that was a market I used to trade frequently. That's dead. And
that's why I'm watching Ethereum as kind of like a bellwether for that, because there's so many projects that are tied to it, and you can see how like there's just not any follow through on Ethereum. And that's why I closed the trade where I did. Because like when I noticed just the signs of weakness, it's like as soon as it tagged that 100% profit target, I didn't even have time to get any fills up there. So I had to, get exits a little bit lower, but that's why I was so tight with the risk management on that. Cause there are so many dying projects, and like, I think we have a long way to go. Like there's still a shit ton of these projects that just need to die and disappear. And ultimately that's healthy. It's, we need the pruning of the space, but I think it's going to make things uglier for the altcoin market as a whole in the short term. Even though long term we'll see some projects succeed and ultimately grow in value over time.
Yeah, and then absolutely. So I think some of the coins that have performed well will likely, especially the newer ones, will likely continue in the next cycle to outperform some of the others. I'm not as interested or excited about stuff like Ethereum because when you're trading it at $1 or whatever. Buying it at 100 or whatever, or 200, it doesn't have the same edge. One thing that I've often mentioned on a fundamental note with looking for innovation that solves problems, real blockchain problems where there have been crises in a blockchain space. And we've talked about governance with both Bitcoin and Ethereum. We've talked about Ethereum smart contract bugs and multi-million-dollar losses as a result of that. One of them tied into the governments. But there's another third problem that I'm starting to see a lot, and I'm seeing projects die and also complain, is lack of funding. And this is another big killer for projects.
Oh, yeah.
When projects start to run out of funding, and Zcash, for example, I still have a bag of Zcash. It's my worst performing bag thus far, and I'm that's fine for now. Zuko's getting a lot of flack right now. They're calling Zcash his retirement fund. He's getting a lot of flack because he wants to extend the founders reward. Apparently, they're running even a deficit on their burn rate, and the founder reward's supposed to end, which is basically giving 20% of the block rewards to the founders and to the Electric Coin Company. He wants to reinstate that after 2020, which will be the first halving, and that's creating a big kerfuffle. And he's complaining, well, they're going to run out of funding, right? I think Ethereum had complained several times about running out of funding. Like, what happens when the ICO money's gone? What happens when the tokens are gone? Bitcoin is unique in that it never had funding. It was all volunteers. So the fact that like maximalists are so hardcore about their beliefs and their philosophy that they're willing to sacrifice blood, sweat, and tears just for the cause, which in some ways is admirable, even though their opinions can be a little bit extreme. I still admire them for that because there's a sense of nobility or altruism there for a greater cause. But what's interesting with Tezos is it's self-funding. So aside from the massive war chest that Tezos Foundation has that they keep giving out in grants, whenever someone proposes a protocol change and they submit their proposal, they put an invoice on that. And that gets paid with some of the inflation, some of the XTZ inflation, and that they get paid automatically. So it's like the payment of that is automated. Did it just pop 160? Oh, geez.
Yeah, I'm watching it. This must be because of the it went live on their app. Correct me if I'm wrong, but I'm pretty sure that there was no spread here a minute ago, right?
No, there wasn't.
Okay. I'm like, I remember just saying there was no ARB opportunity. What is happening?
Well,
yeah, look at this. This is a 5-minute chart. What the hell is the volume on this? 80K, 60K. Okay, so somebody's buying a couple $100,000 worth of this.
That's wow, I didn't know my speech had such an effect.
Yeah, there we go. That's hilarious. So,
break it. Yeah, nice. Hopefully it breaks the all-time high into some new.
Let's see if Kraken's going to follow suit.
You've got some
should I sell the $100 worth of XTZ I bought on the Coinbase app in the beginning of class? That's funny. Let me see if it's reflecting that in the app. Make sure price didn't lock up.
Maybe it's
Yeah,
gonna pull
it's
a
live.
check out the link chart, what it did after the Coinbase listing. Maybe it'll pull off one of those. It went parabolic as hell.
Hey, my $100 is now worth $108.
Woo!
Woo!
Dinner's on you, Chris.
Yes. Hey, at least it's working. Like I'm literally on the iPhone app and I haven't moved it. Yeah, I haven't traded XTZ on Coinbase Pro. Maybe I'll move some over.
Gee.
No, there's not a Coinbase Pro app, as far as I know. I'm just talking about the retail app. That's what I just, as a test before we got started today, I just bought $100 worth on the phone app just to see if it was trading, and it works. It was instant. So that's probably what's going on right now.
Is your $100 that caused this pump, Chris?
Trading
the
that
ball
big
rolling.
size, baby.
The other exchanges haven't even caught up yet. There's some major arbitrage right now happening. If anybody's fast on the trigger.
Yeah. I'm too old for this.
That's why I prefer trend riding, like
Right.
let it go to ridiculous high prices with some nice parabolic candles, which it hasn't done yet. And then I'll get interested. Until then, don't wake me up from my nap.
Yeah.
Yeah,
Zen, that's usually what I do is when I'm traveling, I just have to log in to Pro on the browser. It's amazing how far we've come. Like does anybody remember back in 2014 or 15 when any volatility would completely like lock up and shut down all the exchanges? It was like anytime there was a good trade, it was like, oh, sorry, all the exchanges are down. Okay, so just going back to my thesis on Tezos. So I've been thinking about this, and like obviously my trade that we've been talking about for a long time is still intact. The one worry that I have for Tezos right now, and I don't know how true this is yet, is I wonder if Tezos is becoming a crowded trade. Meaning like, with all these listings, if all the retail noobs on like, eToro and Coinbase and all these places, it's great that they're getting listed. But what I don't want to have happen is that it becomes like this super crowded trade. And then like the second that there's a pullback, all these rookie retail investors and traders just emotionally dump, which could cause kind of like a domino effect. So, yeah, and that's the thing. Kurt just said, Chris, don't you think the staking would mitigate that? That's what and I use this word loosely, hope. That's what my thought or hope is. I don't know, Rocket, what do you think about that? About it becoming a crowded trade or, staking? Obviously, like early adopters and tech savvy people are going to stake, but like I don't know about all these like eToro type people, and I don't know.
I think like in the short term, obviously, during Coinbase pumps and stuff, you can see some pretty nasty dumps and shakeouts.
Yeah.
I think in the short term, I think there's definitely some truth to it possibly being a crowded trade. It's certainly a favorite now amongst crypto Twitter.
Yeah.
I've been watching it grow. It wasn't a favorite at the lows or when it was dumping. Wasn't a favorite when I was buying it.
Oh yeah, you were getting trolled.
Oh yeah, yeah, for sure. So in the short term, that could definitely be a possibility. I think in the long term, I don't think the overall market has quite really caught up to what Tezos is or what it can do. I don't even think Tezos has caught up to its full potential yet. Because it's so early in the cycle, I think we're just going to keep seeing, there'll be pullbacks, consolidation. There'll be all the usual stuff we see in markets, and probably some nasty shakeouts along the way. But I think we're going to keep seeing Tezos getting hammered with bullish news. I think we're going to keep seeing random large companies and banks and whatever starting to build on Tezos. We've already started to see some signaling that investment banks and stuff are interested in using it for STOs specifically.
Yeah.
And I think the reason why some of them are choosing that over Ethereum as far as STOs, I think is twofold. Number one is they know that there's better alpha and being an early adopter than buying up some crypto nerds table scraps from 2015.
Yeah.
But also the formal verification on the smart contracts can ensure a high degree of perfection and execution where things don't glitch out. And obviously, if someone's running, STOs or multi-billion-dollar DApps or contracts or whatnot, they want to make sure that there's not a lot of glitches and bugs and errors and stuff like that in it, like we've seen with Ethereum. Now, it has to increase on the downside. It does have to increase its block time speed a bit to get to Ethereum speed. And they're working on various different scaling solutions and so on and so forth. But the good news is that they're able to integrate any of those features automatically and easily. I also think that every time there's a new voting proposal, I've noticed, because there was also a new proposal injected, I can't remember when, it seemed like maybe a month ago. And suddenly, like, if you want to vote on that stuff, you need to buy coins. Like, I think to myself, whatever happens if you get in a voting war over a heated topic? Like, imagine the Bitcoin, like, scaling debate, except people could actually buy Bitcoins to vote on what happens. Just various things on the supply-demand dynamic that I think fundamentally the market's going to catch up with in a big way. But it's going to take its time. I think it's very much like, I think we're very much in like a 2016 type of market. And it could take some time to cook. Ethereum took its time. But that's just, obviously that's my thesis, my bias towards that. Yeah. If we popped and went parabolic like a link, if you check out the link chart after it was listed on Coinbase, like it just went absolutely nuts.
Yeah, and then it became crowded and it faded. So this is what I mean by a crowded trade, is like you get everybody that like chases off of the open, right? You get that. Probably, what is that, 2 or 3 days, if that?
Yeah.
Get the bull run, and then everybody's in, and then the project doesn't catch any legs, and then you get that kind of slow grind of death, right? You can see like no volume really came in after the first couple of trading days there.
Yeah.
So like that's my concern. We know kind of, I guess, the fundamental benefits to Tezos and, the project itself and blah, blah, blah. But whenever I'm thinking about from a market sentiment perspective, I'm like, okay, what is it going to take to get this thing to double, triple, and, go higher from there, right?
Yeah.
And somebody said, look at link on Binance.
I think it'll be crowded if we pop a parabolic candle. Like if you look at Link, it's extremely parabolic. Like look at the size of those last candles on the wicks on that, right?
Yeah, and this to me represents like its first full market cycle.
Yeah.
So like, you have I wouldn't even count this. I mean, little bloop, and then you have kind of the first phase 2. You get 1, 2, 3 pushes, and then a deep pullback, right? So like, usually the first market cycle on a new coin is very short. So this one, the early trend started end of April, parabolic kicked in end of June, right? So like, 3-4 month market cycle, right? That's usually kind of typical for a newer coin.
Yeah, for sure. And it went parabolic after that listing. So if Tezos breaks its current all-time high and it pops a link and goes parabolic, I'm definitely going to take some profit off the table.
Yeah,
Not a ton.
so I, running some extensions and looking at measured moves. So I took like basically the size of the first range, and if you stack that on a 1-to-1, and then if you also look at this run and retracement, I'm probably going to take my if we can get up to 250, I'm going to take my cost basis out up there. But again, I mean, for anybody that's like newer and hasn't heard our rants about position sizing and risk management, like it's very, very risky to go heavy on new projects very early, right? Like we've seen a lot of projects die over the years. And if you put like, we talked about this in Amsterdam about like the Kelly criterion for position sizing. Like if you don't have a very methodical way of allocating your capital and you're like, oh shit, I'm just going to go YOLO on Tezos or Ethereum or any other altcoin super early. Sure, you could get really rich if it goes nuts, but you could also get taken out of the game if it goes to zero, which a lot of projects over the past 5 to 7 years have. So like just kind of our warning again is like, A, please don't blindly follow us, and B, like really think through your position sizing, like learn how to properly allocate your portfolio and like think of obviously the reward, but more importantly is the risk. Like what would happen if Tezos did go to zero, right? And like you're either more on the spectrum closer to rocky side where you're comfortable with that risk and you're going to go heavier, or you're like me where I'm maybe 5 to 10% of my active crypto portfolio is in Tezos, right? But just know what you're getting yourself into, know what the risk profile is, and make sure you're comfortable with it. This is definitely not a chat bot or a what do you call them? Troll box?
Troll box.
That's not what our community is about. Like we want people making really wise decisions and really understanding risk management. So I just wanted to say that because I know, it can be really fun to look at the charts, which is kind of like the sexy fun part of all this. But at the end of the day, risk management is what will keep you in the game. And goal number 1 is learn how to survive. And then goal number 2 is learn how to thrive. We just don't want anybody getting taken out of the game by going too heavy on an early project. So,
yeah, absolutely. And obviously there's all kinds of other risks like user errors and hacks and,
there's a million things that could go wrong or that, mistakes that you have to make, and make those mistakes with small amounts of money.
Yeah, absolutely.
Eric, yeah, this is definitely not a pump and dump group. All right, everybody buy. Ready? 1, 2, 3.
Yeah, those groups were notorious in 2014. They tend to revolve around small caps, where like some ringleader will.
Yeah. It's like all the old penny stock guys coming into crypto going, ooh, fresh blood that we can steal from.
Yeah, they're like at midnight tonight, we're going to announce the coin that's going to get pumped type of thing, and then it's like moon coin or some like totally illiquid shit coin that they stocked up on and then they end up dumping on everybody.
Yeah.
Those were notorious in 2014, and that's why you gotta be like wary of people who excessively shill micro cap coins and stuff. Especially if they have big followings and they're shilling all these little micro caps. Have no liquid.
All you have to do really to make sure you don't get dumped on is like, don't pay attention to people that are just like nonstop day trading, A, and then B, look at the liquidity. If it's not trading multi-million dollars, right? Again, now if you're in accumulation phase, that's a different story. But if there's something that's actively trading and it's like, it has runs and retracements in the price action, if it's not trading millions of dollars of like real volume, then you want to stay away from it because one person with $10,000 could move the price big time. That's why we don't trade illiquid crap.
Yeah. And we've just seen so many of those, like the gem finding microcap strategies of the past. Basically, like most of those gem finders got completely wrecked in the bear trend. that
Yep.
strategy did not work for them. And most of their micro caps either died with Cryptopia or got delisted from all the exchanges except for some really fringe, obscure places. So we haven't them, and then like bigger projects, a lot of their liquidity is dried up and stuff. Like even stuff that I used to trade that was really hot, I probably wouldn't even touch anymore. Like Stratus, for example. We made a lot of money off Stratus, but it's just been dropping. The project seems like it kind of got a bit stale, and I think volume's only at like $1 million, right? And it used to be everyone's darling back in 2017 when it was going.
Yeah,
hot.
when in doubt, just go where the liquidity is. Like and like I pulled up, what was that, Bitcoin Diamond I just had up. Like even if you see liquidity on the front page, like make sure it's trading on real exchanges. Like look at all this crap. Like you got a little bit there on Binance, but BW.com, Vindax, what the hell is this stuff? Like, you got to make sure it's trading real volume on real exchanges.
Yeah.
All right. Rock, I'm going to pass it over to you, man. I've got to run. But good catching up with you guys. If you have any other questions, feel free to reach out to me in Discord. And yeah, we've got some exciting stuff going. So, just a quick recap before I pass it over. So again, got Bitcoin working. Hopefully you guys understand the plan there. Talked about, thoughts on altcoins, talked about metals, again, this isn't like super exciting, but to see commodities moving, I think it's actually a bullish sign for Bitcoin that gold is breaking out and people are starting to pay attention to that. And you got big fund managers like Ray Dalio pointing out the risks in the financial system. What else? That is pretty much it. I've been trying to simplify a lot of things in my life, like pulling back on trying to chase every angel investment that I can get my hands on, just because I think a lot of private market valuations are pie in the sky. Like there's just a lot of really expensive stuff out there. And I'm kind of going into defense mode right now where I'm focused, mostly on crypto, obviously, and just looking for really good deals. So if you guys know of good deals, like high quality projects that aren't already overpriced, let me know. And yeah, that's about it. So thanks, guys.
Sounds good, Chris.
And Rocky, I saw that Forbes article you posted.
Yeah.
That's pretty interesting.
Yeah, for sure. Let me just, I'll pull that up. All right, folks, can everyone see my screen? All right, I'm just going to, so I'm going to share this Forbes article for anyone who hasn't seen it. I think it's interesting, very famous investor, hedge fund manager. It's basically, talking about the value of investing in gold and Bitcoin. And, he's basically saying he's very concerned about negative interest rates in Europe and the debt bubble and so on and so forth. And, I think he often in the past has spoken about credit market cycles and stuff like that. So he's probably battening down the hedges for a possible recession. We'll see. Personally, myself, I've been very light on the stocks. I haven't actually applied a lot of energy to them yet. It's on my bucket list for sure. Crypto has it's very captivating, especially when the markets move the way they do. Whereas I have to really kind of dig into a lot of fundamental analysis and stuff. Fortunately, we have Travis who does a lot of fundamental analysis around quality gems, and he likes to buy things that are dirt cheap as well, things that are undervalued, which I think is a really good, solid approach. It's kind of how I like to trade crypto as well. That's usually what my bias is in crypto. I did buy some silver yesterday, some paper silver. So on this the smaller breakout, It'll probably have a little bit of a dip. Wouldn't surprise me if it dipped and then consolidated a bit, kind of similar to this. But I do like the, the possible opportunity as far as like percentage gains, right? Because you can kind of see it's at the lower end of the spectrum. So similar to what Chris was pulling up with his silver to gold ratio, you can see for this to, let's say it ever did hit the all-time high, that would be a triple right there, right? So, I bought some paper silver in my tax-free savings account, added to my paper gold position. I've got a fairly good real gold position going as well from 2017, having taken a bunch of profit out. So it's kind of, you could also see, broke an immediate, I guess you could say it's a little bit of a wedge looking type pattern. So kind of broke a descending wedge. And gold, like I pointed out, has already broken out of the all-time highs. Also another one, I sent out a trade alert at support a while ago on platinum. I scooped up some of that too yesterday, a bit of platinum, because in the past it used to be more expensive than gold, right? Because it's a rare metal, but it's also a metal that's very heavily dependent on industrial use. So if it's specific industries, if they have slow growth or whatnot, then obviously that affects the supply and demand dynamic. But we also have a very large kind of descending trend line. I think if we were to pop and break this immediate descending trend line from the highs, I think that's when it would start to shine and show momentum. So this is like a little bit of an earlier play, and I'm kind of banking on the fact that its correlation is going to catch up, that if gold does break a USD all-time high, or if silver starts to go nuts, that eventually that could trickle through to platinum as well. So I'm still kind of like applying my buy low strategy, but I'm also pyramid trading gold. And what pyramid trading is, for those who don't know, is basically when a market moves in your favor, you add to your position, right? And I feel more comfortable doing this with gold than let's say some markets that move a lot faster, is that this market moves really, really slow. So I think my cost basis, and my cost basis actually, because I was buying in Canadian dollars, so my cost basis I think was around 16,000 Canadian, 1650 maybe. Let's see, Canadian dollar. So it's interesting that it's kind of actually protected, literally like store value for my Canadian dollars, at least what I put into it, because I was buying in this region in 2017, which was I started taking profit probably around this zone right here into, I think October might have been my last purchase. So kind of like around this zone right here is where I was buying a lot of spot gold. Some I'd cashed out some of my crypto profits into gold, and then I loaded up on some more in the fall. So basically, anytime I take profit in the fall, when I took a bit of profit off the table, I diversified some of that into gold. So thus far, those positions are my largest, and those are up 20%. But 20% on a decent size, it's pretty good. I mean, it's not crypto. It's not as big as an investment as I put into Tezos, but it's still good. Good size, good chunk. So And I think that's about it. You know, to me, Bitcoin right now kind of looks like a bit of a, there's a couple ways you can look at this. You can kind of look at this almost like a bull flag. You could also say that, hey, it's a bit of a symmetrical triangle, and you know, both of those things would be accurate, right? Consolidation pattern. And then as far as other markets are concerned or other news events, I think a lot of the news, or at least the news I was paying attention to, is centered around Tezos this week. Obviously, lots of news. We've been watching it climb up the ranks since we first started to get interest. Thus far, my thesis seems to be correct. I'm not going to be happy until it's in the top 5. I think it needs to dethrone some of these shit coins up here in the top 10. And I who knows? We'll see. I wouldn't be surprised to one day see it go toe to toe with Ethereum. You know, a new type of flippening or whatnot, flippening hype. At which point that'd probably be a good time to take a crap load of profit. But you know, I've kind of, depending on where the market goes in this next cycle, obviously nothing's guaranteed. There's a base amount, which is probably about 40% of my overall Tezos holdings, that I'm going to probably never sell and just live off of the passive income that it generates. And then 60% of my holdings will be on the chopping block to take profit. Although, you know, if I do take profit at smaller targets, the percentages will be fairly lower, much lower, because for me, it's like opportunity cost, right? I don't know. We'll see, right? If my thesis is right, it's right. If not, then, you know, back to the drawing board. But so far, you know, the markets and the news and everything is kind of just been reaffirming my thesis to me all year. And I'd say I was pretty, well, I guess you could say early adopter, because I got in on the ICO and then started accumulating as soon as it got listed. The markets actually opened up. And we've talked about this many times, but the HIT BTC price discovery is fake, not real volume, not real supply and demand. I wouldn't be surprised if Bitcoin were to retrace from here and have a dip. You know, it's hit resistance point. That wouldn't, you know, that would match a consolidation pattern. If this consolidation pattern were to extend out a few months, the probabilities of it having a dip, I'd say are high, unless it breaks out and then has another dip at resistance. Other than that, I don't really have a ton more to say, but it is it's nice seeing that after this retrace. This is interesting. See, this is acting very, very bullish on the smaller time frames, right? It had a retrace correction and like kind of like a little bull flag, and then it just broke it. It popped back up into the highs. So this is definitely one of those things where I don't feel bad pyramid trading at all, because I think there's just a lot of economic uncertainty. The global markets are cyclical. I'm not an expert in the legacy markets, so, but you know, that's my hypothesis. So far, you know, gold could be a bit of a canary. Do you delegate or bake? I delegate. It's just for me, it's a lot easier. So time management. But you know, if you've got the time and the technical skills, you could also just run your own nodes as well. All right, folks. I think I'm going to end it there. So we've gone about an hour and 43 minutes. Let's see what next week brings for us. Any advice on choosing a place to delegate to? I know, I don't know if he has any room, but I know we have someone in our group who's running a delegation service. His handle is @BB. It's in our group. I don't know if he still has any room though. He might be at full capacity. So that would be the first place that I would recommend. And if he doesn't have capacity, I'd say, you know, try to find one that's reputable, that still has capacity, maybe kind of look around on that. Oh yes, there's a Binance hack. This is the handle. There was a Binance hack, KYC documents. Seemed like it was from a early 2018. and the hacker tried to extort them for 300 BTC or whatever. Anyways, bit of drama there. This is one of my pet peeves around KYC, is that, you know, regulations requires us to send all our passport or private information over all over the internet, and we know that even Equifax couldn't even keep people's information secure. So in that sense, we have an old system and a new model using the internet. We're trying to use old rules. You know, maybe that was safe when before giving your documents, when they used a photocopy machine and put it in a file in a cabinet locked somewhere in a building, because you'd have to break in physically to get that information. But you know, the internet these days, you know, there's a lot of data breaches, and the system hasn't caught up with the new technology yet, because I don't know. Anyways, that's my biggest pet peeve around all that KYC stuff. Is it is a bit of a risk there. So I don't know if anybody here has been affected by that, but if anybody has been affected by stuff like that, I would definitely reach out to them. And if I was affected by something like that, I'd be asking for some compensation or something, right? For some damages myself. That's just me. So, but you know, they're responsible to secure people's info, just like people's money. So, all right, folks, we'll leave it at that. Hope everyone has a great weekend, great week. See what the week brings next week. Every week seems to be fairly exciting. There seems to be a lot of new stuff happening each week, so that's kind of interesting. And see you all in the trenches, folks. Cheers.